The only thing I love more than watching my boo win the Super Bowl is staring at Strongman's glistening, sweaty pectoral muscles as he claps Jeremy's cheeks into the multiverse.
Well, good evening, everybody, and welcome back. We got a very, very special two-part video today. In part one of this house hack expose, we're going to look through the financials in detail for Meet Kevin's aspiring publicly traded house hacking venture known as House Hack. That's part one. Video two is going to explore some very interesting and, dare I say, grifty related party transactions under which Meet Kevin has enriched himself at the expense of house hack investors. Very disgusting. So Meet Kevin is all about house hack. It's a great investment. You can buy the convertible bonds. You can buy stock in it. It's going to go public eventually. You get all the upside and none of the downside. It's the best investment in the world. And apparently, according to him, from what I've heard, the business is profitable. That's interesting, Kevin, because I looked through the financial statements as of December 31st, 2024, and you're losing massive amounts of money. But let's go ahead and show you the proof, because nobody takes me at my word. They only take grifters at their word. So there's this beautiful thing called the Securities and Exchange Commission, SEC.gov. And House Hack posts filings to this website. He actually is required to post, quarterly, annual reports to this website. It's public information. You just have to know where to find it. If you go to SEC.gov and search for House Hack Incorporated, you can look at all the filings that have been filed by Meet Kevin's company, House Hack. And I highly recommend you do so before you invest in his company. And I'm here to tell you, as a certified public accountant whose bread and butter is looking at financial statements, this is an insanely risky investment. This is not a home run. This is not something that you should put money into that you can expect to see for the next couple of years. And there's a good risk that you may never, ever, ever, ever see a return at all. So if you want liquidity, if you want access to your capital, if you want a good shot at getting a decent return, this is probably not the thing to do. Let's make sure we're sharing. Okay. So what we have here is the balance sheet of House Hack Incorporated for December 31st, 2024. It's the exact assets, liabilities, and equity that our boy Kevin had in his business. And then we have a comparative balance sheet on the right for 2023. So we can see how things have changed over the past year from December to December. This doesn't account for any new things that he's done after December 31st, 2024. So how is Meet Kevin sitting for cash and short-term investments or treasuries? Well, he's got about $10 million of cash and about $2.5 million of short-term investments. That is a massive decline from the year prior, where he had $15 million of cash and $13 million of short-term investments. He's been deploying a lot of capital into purchasing properties, which is the purpose of his business. Okay. Now, funny enough, and we're going to look at this later, there's these related party amounts that are due, right? Meet Kevin actually owed House Hack some money, but in a twist of fate, the money that he owed to House Hack was forgiven. Very interesting. Okay, we're going to probably explore that in the next video. But suffice it to say, Meet Kevin, who claimed that he was putting his own capital into this business, that he was risking his own money, actually really is not. As a matter of fact, he claimed he was going to invest in this business, and it turns out that that investment never really materialized. Interesting, Kevin. So he's only risking other people's capital, even though he claimed that he was putting money himself into the business. Interesting, Kevin. Not grifty at all. So we see that the cash and short-term investments position has dropped pretty precipitously, and that's mostly to pile into real estate held for investment and to pay for operating losses. He's losing money, as you're going to see in a second. So over the past year, he purchased approximately $35 million worth of property. So he has been finally deploying his cash instead of sitting on treasuries, which I guess I can commend him for, because that's what you're supposed to do, instead of just sitting on the freaking cash like Palantir, for example. Okay, so if you look at it from a liquidity standpoint, he has enough liquidity to stay afloat for a while. He's got $12 million of liquid assets, and he's got $350,000 of short-term debt. And if you look at it from a, if you compare long-term assets to long-term liabilities, he's got $41 million of property, and he's got $10.4 million of convertible bonds. So his debt picture is not that bad. And the reason that's the case is not because this is a massively profitable business. It's because he has taken a lot of equity financing. This business hasn't returned $1 of profit. It's had egregious losses. And the only way he's keeping this a business afloat is not by his personal investments, because apparently he doesn't have to do that, but he still somehow gets the only voting stock, but by getting money from you. He is financing his salary, the salary of his employees, all of his operations, all of his property purchases that he's doing that from you. Your wealth, your capital is on the line. His, not so much. Okay, but he gets all the voting rights. Interesting. So you want to see how bad the dilution is, right? So whenever I look at financial statements, I look and see how much the share count has increased. If we go down and we look at non-voting common stock, this is the stock that you own because you're not entitled to a vote. The only person that is allowed to vote is Kevin. This up here, the voting common stock. Kevin holds all the voting common stock, of which he did not pay for. He only paid for a portion of it. The rest was forgiven. That's right. Me, Kevin, has all the control and didn't have to really pay for it, except for a couple $100,000. The rest was forgiven because free stock. But you don't get to vote. You don't get to vote. Your capital's on the line and you have no say. Interesting. So he had 40 million shares outstanding of non-voting common stock as of December 31st, 2023. That increased by 8 million shares in 1 year. So the dilution of your future profits, which will probably never materialize, is 20%. He's diluted your future profits by 20%. Not from his own capital, from future investors. Accumulated other comprehensive income. We'll see what that is in a second. It's very rare, exceptional things. Accumulated deficit. If you want to know how much a business has gained or lost in profits over its lifetime, you always look at the retained earnings account, or if the business has not turned a cumulative profit, you look at the accumulated deficit account. How much has Kevin lost in his venture? Of your capital, not his. He has lost $5.3 million as of December 31st, 2024. And it's now May 8th, 2025. Okay? So $5.3 million of losses of your capital. So all that money you put in, write off a chunk of it. Gone. Okay? So over the course of the year, he's lost about $4 million in 1 year. 1 year. And some of those losses are from the forgiveness of his promissory note that secured the shares that he purchased. And guess what? That got forgiven. So Kevin doesn't have to buy his own shares or risk his capital. Interesting. As a matter of fact, he is actually selling buildings to his business. That's right. You are enriching Kevin because he's selling some of his properties, at least one that I saw, to HouseHack. Who's making the money and who's losing the money? It seems like the non-voting common stockholders are losing money hand over fist. And Meet Kevin gets voting stock for basically free. And he gets to sell his own personal property to HouseHack, which you paid for, and he gets to pocket the profit. Dirty. We're going to talk about that in another video. We can't cover it all here. So let's look at the profit and loss. So he's generated about $2 million of rental income for the full year, December 31st, 2024. Property-related costs, $709,000. Depreciation, this is expensing the cost of the buildings over their useful life. It's a non-cash expense. The cash is up front when you make the capital expenditure, and the cost on the income statement is depreciated over the building's useful life, non-cash expense. $911,000 of depreciation, perfectly normal. And other operating expenses, $5.2 million. $5.2 million of other operating expenses. What is that? I wonder who's getting that money. Could it be members of the board? Could it be Kevin? Could it be Kevin's salary, his benefits, the benefits of his employees, the contracts that he has with board directors? I don't know. Where's the cash flowing? The cash goes from the investors' pockets into House Hack. And then the cash goes partially to properties that he's purchasing. But a huge chunk of that cash that you're putting in is being churned around into the pocket of Kevin, his employees, and some of the board. Follow the money. For a total loss from operations of just under $5 million. So in a year, he lost $5 million on the accrual basis of accounting. But oh, wait, he got interest income of $412,000. How is he generating interest income? Well, if you go back up to the balance sheet, you can see that he has these short-term investments, right? These are treasuries. Treasuries are short-term government debt, and they're yielding pretty good. I myself have like $34,000 of treasuries, okay? And they're yielding approximately 4.25%. So he had this huge cash balance on his balance sheet, this treasury balance that he was collecting interest income on. But since he's depleting that to make acquisitions, which is fine, the interest income will drop. It'll keep dropping and dropping unless he raises more capital. Okay. So he generated $412,000 of interest income, and he had $295,000 of interest expense. What is that interest expense? Well, I'm sure some of it is like other stuff that he's paying for in the course of his business. But a big part of the interest expense is that he issued convertible bonds that yield 5%. Go look up what a 10-year treasury is yielding or a 30-year treasury is yielding, and then look at it on an after-tax basis, because the interest that Kevin pays you to invest in a company that lost $5 million of operating losses last year, that interest is taxable by the federal government and the state government and potentially local government. Treasuries are state tax exempt. So on an after-tax basis, you're probably better off just on a yield alone in a treasury. Now, when it comes to risk, you are astronomically better off in government debt instead of house sack debt. But that's the interest expense. Okay? So he lost $5 million from operations, and then on top of that, he spent $300,000 on interest expense, raising capital at an exorbitantly low interest rate commensurate with the risk that you're entailing by lending him money. Dividend income. Is he buying stocks? What is he doing? Apparently, he got dividend income of $129,000 and a realized loss on sale of securities. So he either sold some treasuries or he sold some stock, whatever he's freaking buying. And he lost $55,000 on that. So his total loss on the accrual basis of accounting was $4.8 million. Talk about capital destruction, okay? Weighted average common shares outstanding, basic and diluted. So the weighted average common shares outstanding kind of takes into account, it's like this formula where if you issue shares in the middle of the year, they don't count as full shares. But you can see that there's this huge increase in shares outstanding. This is exorbitant dilution, okay? If you were an initial investor in House Sack and you're a non-voter, which you are, only Kevin has voting rights, and he didn't even have to pay for the stock except for a couple $100,000. The rest was forgiven. Pretty grifty. You're being diluted exorbitantly, and you don't think he's going to issue more shares? And you don't think those convertible stock, that convertible debt is going to be converted? So if you own one share of House Hack, you lost 10 cents last year. 10 cents. Okay. So we can see that we have the statement of stockholders' equity. Okay. And we can see a lot of transactions here. Basically, we have voting common stock. There's 1 million shares, all owned by Kevin, to my understanding. And then you have non-voting common stock, where between 2022 and 2023, he issued 18 million shares. And then from 2023 to 2024, he issued 2.4 million for cash. He issued 5.2 million for exercise of warrants. That's like a right to purchase additional shares. He bought back 10,000 shares, and then he issued shares for services. 257,000 shares were issued for services. And then you see this, forgiveness of subscription receivable, related party. Kevin, tisk, tisk, tisk. What are you doing there, bucko? You grifter. All right, now we're going to look at the statement of cash flows, which is the actual core operations of the business. So if you see a positive number, that's an add back under the operations section. And if you see a subtraction, that's basically like a non-cash gain. So you add back non-cash expenses and you subtract non-cash gains. So we have $911,000 of depreciation. Shares issued for services that hit the profit and loss. Further dilution, paying his buddy boys, probably him himself as well. Additional ownership of the business, okay, for being clowns. Amortization of investment discount or premium. I think that's like a treasury related gain there. Realized loss on sale of securities. He lost $55,000 selling either stock or treasuries. Forgiveness of subscription receivable due from related party. Your business that you are a partial owner of experienced a loss of $820,000 as a non-cash expense because Kevin got his loan forgiven. He owed HouseHack money for the stock that he claimed he was buying. And then it got forgiven. Oh, I'm sure there's no effery going on there. Okay. His total cash burn in 2024 was $2.5 million just on operations. Just on operations, baby. Okay. So if you look at the investing activities, okay, he purchased some investments, 17 million, but then he sold 30 million. So he net sold approximately 13 million of investments, which is fine because he sold the treasuries to purchase real estate. He plowed in, just like he's plowing your bunghole, $35 million of real estate, $35.5 million of real estate. And then he generated $1.2 million from escrow deposits used for purchase of real estate. And then we go down to the financing session. So right off the bat, we see that he's drawing from a line of credit. Now, businesses have lines of credit. The place I work has a line of credit. Basically, if you overspend your account, you can actually draw on your credit line. It's basically a short-term loan to meet any temporary cash flow needs. So he drew $16 million overall from his line of credit over the past year. He issued and got $10 million from convertible bonds. $10 million. You morons gave him $10 million for a 5% interest rate. That is, on an after-tax basis, roughly equivalent to a treasury on a business that is losing $5 million a year. At least that did in 2024. Geniuses. He generated $2.4 million issuing shares. He generated $460,000 for a subscription receivable, and he generated $5.2 million for an exercise of warrants. All the cash of this business is coming from debt and equity financing. Okay, mostly from equity financing. That's why his balance sheet still looks kind of good, because he's leaning more on the equity financing because it's basically free. I mean, think about what you're doing. You're giving him money for the promise of future profits of HouseHack run by Meet Kevin, of which only he has voting stock. This is a complete and utter catastrophe. Now, apparently he's got his Q1 earnings coming out, which I'll respond to that. I'll look at his Q1 earnings, okay? And I can't wait to see the manipulations that he's doing, because he's always very sneaky. He even had a live stream where he was calculating his profit and loss, and he did the math incorrectly. What a freaking clown, okay? So I might actually do a live stream and like film while he's going over his earnings. But if he ever says that he's making money, he's making a profit, he's not making a profit. He's cash flow negative from an operational standpoint. He lost just under $5 million on the accrual basis of accounting for the full year 2024. And I highly doubt that he's going to turn a profit in Q1 of 2025. And remember that some of your losses that were recorded on the accrual basis of accounting were a write-off of a note receivable that Kevin pledged to give to HouseHack, but never paid. I thought he was rich. How can he not afford to put his own capital into the business? to acquire the voting stock, of which only he has. Interesting there. So what do you guys think about old Kevy Boy's earnings, huh? Kevin's crushing it. You see any griftiness going on? There's going to be a part 2 video. There will be a part 2 video. I'm going to go in detail. I'm even going to try to find the house that he sold to House Hack. Imagine like I start my own business, right? I raise money from you. I have all this capital. I'm paying myself a decent salary. You know, I got this whole operation going on. I rent one of my other properties to the corporation. So you as the shareholders are paying the rent into my pocket. And then I say, hey, I tell you, I'm going to invest in the business. I have my own money at risk in this business. So if I'm risking my own money, you should as well. And then I tell the board that I actually don't have the cash to invest right now. So issue a promissory note, a note receivable, and I'll pay you back. And then the board says, hey, you know what? You don't really have to pay the note. You don't have to pay the debt you owe to the corporation. You just get the voting shares for free. Man, what? Man. All right, check out the services link tree. I'm a CPA. I provide a variety of services, bookkeeping, tax preparation, sponsored videos, one-on-one consulting, and I have a book, Stop Being a Broke Loser. It's all in there with presentations. You can book a consultation with me. And obviously, I know what I'm doing when it comes to accounting. And Kevin thinks he thinks he's sneaky. Oh, nobody's going to read my investor reports, bro. They're just going to watch my YouTube channel. And he's actually right. That's mostly what people watch. They don't actually go read the reports and see the griftiness, which I will expose in another video going on. It's disgusting. Okay. All right. We're talking about Bitcoin. Right? Why are we talking about Bitcoin? Blah, 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 blah. Okay. Is part 2 the loan that House Hack gave him and then forgave the loan they gave him? Yes. But there's more. There's multiple people that are siphoning money out of House Hack. So they're not risking any capital, but they're siphoning money out. And the investors, which are not them, are paying for it. I'm not lying to you about post evidence to you. Email it to me. For the love of God. I'm sick of hearing about spring. It's 2040. VT is 60% China. Taxes aren't a thing anymore. Strongman pivots to financial advising. He now averages 12 views, and Gil is the only commenter left. That would be an utter collapse of my channel. Okay. I don't know how it could get that bad, but I guess anything's possible. But I appreciate your donation. We got DeQuavius here. Shantavius DeQuavius for $1. Thank you very much. Yes, he is a grifter. Must have bought Tesla and sold at a loss. Yeah, I'm really going to go through the nitty gritty and try to find some of the property transactions so I can like present it all. But it's dirty what's going on. Very dirty. He lost money in 2023, even with all his money in treasuries. He has high operation costs. He should concentrate on one area instead of flying his team everywhere. And if I understand this correctly, I'll confirm this later. I believe he's not charging the corporation for the use of his private jet. So he's actually got like the profits are inflated for this business because he's using his private jet to skirt around and find these properties, but he's not billing the corporation. I could be wrong. I need to confirm that, but that's what I recall he was doing. Okay. But I find it very interesting that he couldn't come up with enough capital to buy his own shares. And then the board forgave it. And it was totally impartial, bro. You don't have to pay for your common stock. Oh, God. Let's see. All right, everybody's talking about crypto. Nobody cares about the topic. They all want to talk about crypto. Kevin said on a live stream that House Hack is already valued $10 million more than what it started at. What's the value? Okay, he's got some properties that he's losing money on. There's no value. I mean, I guess liquidation value. There's no profits. It's like Tattooed Chef. It doesn't make any freaking money. You need to book a consultation, bro. That's a conversation in and of itself. Anyway, that's House Hack exposure part 1. The earnings were a total and complete disaster. Meet Kevin is not making money. If he says any other things besides I'm losing $5 million every single year, if he says anything besides that, he's full of crap. I looked at the financials. You're looking at Meet Kevin basically deceiving you. and you're all a bunch of clowns. Check out my services tree. Check out all the services that I provide. I'm not going to take your capital and blow it on nonsense. I'm going to prepare your taxes, do your bookkeeping, give you a sponsored video, and all that good stuff. Click the pinned comment and have a wonderful, delicious night. Cheers!